Hey everyone, welcome back to a weekly market outlook. This is for the 16th of June 2025, and let's get through some of the fundamentals last week there. We obviously have the inflation that we are looking at here, below consensus, but overall it is a higher inflation number. If you take a look at the headline inflation, it went up from 2.3 to 2.4%. Core CPI is pretty much stable at 2.8% there. PPI numbers has also gone up from negative 0.2 to 0.1%, both for the PPI as well as the core PPI monthly changes there. Preliminary sentiment from the US increased from 52.2, way above the consensus at 60.5. But again, this is preliminary numbers. A lot of developments happening over the weekend as well. We got geopolitical tension between Israel and Iran. Obviously, the situation in the US there, it's borderlining more of a potential for a civil war developing there. And Trump still thinking he's king, doing his parade there. Tariff issues not solved either. Federal court has extended that reciprocal tariff to still be in place until the 31st of July. That gives Trump a lot of window because the deadline for the reciprocal tariff is on the 9th of July. We got hints from Besson that basically Trump is going to kick the can down the road again. No action is likely going to be taken. There's going to be an extension. That's going to be the highest probability of what's likely going to happen on the 9th of July. And taking a look at this week, to focus, we are looking at Bank of England and three actually. Bank of Japan interest rate decision, expected this to remain stable. FOMC interest rate decision, FOMC not able to cut interest rate with how the situation in Israel and Iran is developing. Oil prices is shooting up high, and that could push inflation up as well. And also, the headline inflation actually picked up. It's not down. It was 2.3 to 2.4%. The FOMC has zero reason to start cutting interest rate at this point in time. Same thing with the UK there. Bank of England is unlikely to change their interest rates there. They're not going to be cutting interest rates down. They're likely going to leave it at 4.25%. And I don't think there's any sane central banks out there that's willing to cut interest rates on like of the situation that's developing here between Israel and Iran. So that's the current status quo. We're not going to go anywhere in terms of the data that we're looking at this week either. So a lot of uncertainty going on, depending geopolitical tensions heating up as well. Started on Thursday. Obviously, this has been day 4 and day 5, and things are just getting worse by the minute here at this point in time. All right. Let's take a look at the technical side of things. No major impact onto the currency market. We're looking at the currency market being flat right now. Market is just unclear in terms of how to react with the whole development here. A lot of developments happening this month here, and it just everyone's just looking at the whole thing as like it's not good. Everything is not good. But we're not looking at that FX impact here. We don't see the market gaps up like crazy following what happened over the weekend here. AUD is still one currency to stay away from. 65 cents. It's just there. Price is just not going to go anywhere. It's not pushing up higher. It's not able to push beyond 65.50. It's not really coming back down below 65 cents either. So we're stuck between 64 and 66 pretty much on the Aussie. Again, this is the currency that I have stayed for the past month or so. It is untradeable. It's too choppy. The Euro USD limited gains to the upside. Break above 1.15, still being capped by 1.16. At the very least, the money structure has been changed again. It's not just a change of character right now on money structure, just reverting this back into an uptrend. But we're just not seeing any drivers in the market as of time of recording. Obviously, things can change there, but this is just current outlook on the euro. It's just not going to go anywhere as long as the 1.16 is still up there. Similar situation with the sterling here. We expect that run to be higher above 1.35 to 1.36, but as I said, it's very hard to break above 1.36. Once we clear off 1.36, obviously there's nothing stopping sterling there in terms of a technical side of things. But if you take a look at the movement here on sterling, we got huge gain in April, may, still gain, but it is slowing down. It's pretty much half the move of April. And May to June, we're cutting that movement by half again. So the grind is happening right now on the sterling here. Not looking at enough demand for sterling to be taken any higher at this point in time. And the dollar yen here does shows one very critical view that we have here. Despite all the geopolitical tensions, we would consider a safe haven to be benefiting out of this. For your information, I know the chart's not included here. Gold prices are not going up. It's not shooting above 3,500. If there's a genuine concern with the whole situation there, gold by now should be about 3,500. It's still stuck at 3,450. The yen should have pushed the dollar Japanese yen back down to about 140. We're not looking at that. Dollar yen is still being capped. The US dollar is still weaker against the Japanese yen, but this is again more on interest rate differentials between the monetary stance of Bank of Japan as well as the FOMC. On one side, the Bank of Japan is still expected to hike interest rates in 2025, and they need to, because that's the current economic situation there. They need to rein in the inflation there, put a little bit of a cap in terms of how inflation growth is going to be, while the FOMC is still being pressured by Trump to start cutting interest rates. But the current situation just paints a different picture, that it is technically and fundamentally impossible for the FOMC to start cutting interest rate this month in June. So no expected changes here, and that is still what's capping the dollar at this point in time. So what we can say here, the dollar is not a safe haven, the Swiss franc is not a safe haven, the Japanese yen is not a safe haven here, the euro is not a safe haven here. We're not looking at any safe haven flow with the current situation developing. I think everyone's just really trying to figure out which is actually going to have a much bigger impact. Is it a tariff? Is it the current situation within Israel and Iran? Is it going to make things worse? Is it going to push oil prices up significantly to the point that inflation might actually come back globally again? So all central banks are not stupid enough to start cutting interest rates at this point in time. The best situation, the best thing that they can do, especially this month and next month, is just to wait and see how things are developing, both on the tariff front as well as how oil prices is going to be impacted by the geopolitical tension. So that's pretty much it for this week. Good luck to trades, and I'll see you soon.